Good day. Welcome to another session of Folk Tutorials. Today we are going to continue our study or our lesson on manufacturing accounts, and we are going to do so by taking a practical example and see how we'll be able to solve manufacturing accounts question using the format that we studied in our previous video. So come with me as I take you through this question. The following is the trial balance of Ejako Manufacturing Limited as at 31st March 2009. We have purchases of raw materials 372,200 naira. Then we have carriage on raw materials 10,500 naira. We have sales 830,900 naira. Opening stocks. We have three different types of opening stocks, as you can see. We have opening stocks for raw materials. WIP is for work in progress. And then we have closing opening stock for finished goods. Debtors and creditors also, bank and cash is combined as one figure. General expenses is there. We have rent and rate, light and heat, factory power, insurance, sales commission, salesmen's salaries, royalties. Factory wages, we have both direct and indirect components. Discounts, we have discounts allowed and discount received. Administrative salaries is there. We have drawings, capital, land and buildings, plants and machinery at cost, delivery van at cost, returns, and provision for depreciation. As at 1st April 2008, we have plants and machinery 66,600 and motor vehicles 42,200 naira. These are the balances on the trial balance, and then the total is 1,803,900 for both the debit and the credit side of the trial balance. Now the additional information. The first one, stocks at 31st March 2009. We have raw materials to be 28,000 naira, work in progress to be 16,500 naira, finished goods to be 20,680 naira. Then the second one, light and heat, rent and rate, insurance are to be apportioned. Factory should get 3/5 and administration should get 2/5 or 2/5 of those items, the figure that we have for them. And so that is what we are going to do. That when we get to the expenses of light and heating and rent and rate, we are going to apportion them, and a part will go for factory overhead and a part will go for administrative expenses. And then finally we have plant and machinery, depreciation on plant and machinery. Plant and machinery and delivery van are to be depreciated at 10% and 20% respectively. You are required to prepare manufacturing and income statement for the year ended 31st March 2009, and then also a statement of financial position as at 31st March 2009. So this is the question. So we are going to solve the question. And what you have to do anytime you have a question like this is to go to the additional information, check for any workings, and then work on them first. And then you can go back and start your work. We are asked to prepare manufacturing accounts and then income statement for finished goods. And so what we are going to do is that we have to first of all go to the additional information and then start our workings. Fortunately for us, this question is a little cheaper because we don't have much information down there. And the only information down there that may need some workings is the apportionment of the common expenses between the factory and the administration, and also the depreciation aspect. And so we are going to work on that briefly, and then we will come back and start our main work. Okay, so let's start by calculating the apportionment of the common expenses. And so I will say workings. Okay, so we'll do some workings before we start the main work. And the first working we are going to do is the apportionment of common expenses. Okay, and so we are going to share some expenses for factory and administration. Okay, and the first one is light and heat. The figure for light and heat in the trial balance is 19,260, and we are told that factory should take 3/5, and so for the factory to be 3/5 times 19,260 naira, 19,260 naira. And then for administration, we are going to have 2/5 times 19,260, and that will give us 11,556 for the factory. 11,556 naira for the factory, and for the administration we are going to have 7,704 naira. And so this is how we are going to split the light and heating for factory and for administration. The next common expense here is rent and rate. And so we write our rent and rate, and we will take 3/5 of rent and rate for factory, and then 2/5 of the same for administration. And the figure for rent and rate is 8,240 naira. And so 8,240 naira multiplied by 3/5, and then that is going to give us 4,944 naira. And then 2/5 of the same amount is going to give us 3,296 naira. Okay, so that is the apportionment that I have done. And then finally, we are supposed to share insurance as well. So the insurance expense is also going to be apportioned in the same ratio, 3/5 and then 2/5 for both factory overhead and then administrative expenses. And so the figure for insurance is 2,500 naira. 2,500 naira. And so 3/5 times 2,500 naira is going to give us 1,500 naira. And then 2/5 of the same 2,500 naira is going to give us 1,000 naira. And that is how we will share our common expenses. Okay, so the next working that we are supposed to do is our depreciation. And we are supposed to depreciate two different non-current assets. The first one is plant and machinery, which is supposed to be depreciated at 10%. And so depreciation of plant and machinery is 10% of it's on cost. And so the cost of plant and machinery is 250,000 naira. And so that is going to give us 25,000 naira. And also we depreciate the delivery van at a rate of 20%. The figure for delivery van at cost is 125,000. And so 20% of 125,000 is going to be 25,000 naira. And that is what we are going to have as depreciation for delivery van. And so these are the only workings that we are going to do for now. And so just take note of these figures as we go straight to our manufacturing account and then solve it. So we are doing that for Ejakun Manufacturing Limited. So manufacturing account for the year ended 31st March 2009. So I'll put my three currency signs here, which are Naira, which is my three Naira signs, because we are working in Naira. And then I will start the manufacturing account. Remember that I told you that the manufacturing account is just, the purpose of the manufacturing account is to estimate or establish the cost of production that will be used to prepare the income statement. And so over here, we are going to establish the cost of production by looking for our prime cost and then adding up our factory overheads. And the prime cost is also made up of our direct material cost used, the direct material used in production, the cost of it, and then the factory wages that are direct, and also if there are any direct expenses, we will bring that. And so that is what we are going to do. We are going to start by establishing the direct material cost. And so we will say direct materials. We will go through a process as I taught you in an earlier video. So we'll start with our opening stock or inventory of raw materials. And in the question, the opening stock of raw material are 28,420 naira. 28,420 naira. And then we proceed to add our purchases on raw materials. Now, take note that if there are no adjustments on purchases, you add it straight to your opening inventory or stock. But then, because in this question there was an adjustment on purchase, there is a carriage on purchase, and so we have to adjust that before we take it. And so our purchases of materials, the figure for that will be recorded on the first currency sign, and the purchases for materials is 372,200 naira. That is the purchases of materials. And so we add carriage of materials. Now the figure for carriage of materials in the question is 10,500 naira. And so when we add that, we have 382,700. That is the cost of materials available for use. And so we have to also take out we have to look into the question to see if there were any returns of materials purchased. And yes, we had returns. Now you will see from the trial balance that there were returns. We just said returns, okay? Now the one on the debit side, which is 9,000, is returned inwards, and the 21,000 is returned outwards. But then someone will argue that they didn't mention whether it was for materials or for finished goods. But you could see also that there are no purchases of finished goods in this question. The only purchases we have here is for raw materials. And so if returns are there, then obviously the purchases returns here will relate to purchases of raw materials. And so we have to take out returns on purchases. Purchases returns. And the figure for purchases returns is 21,000 naira. So we take that out. And now we will have our net purchases. Our net purchases for the period for raw materials is 361,700 naira. And so now we have established our net purchases by going through this procedure. Our opening stock for raw materials plus our net purchases should give us the cost of raw materials that were available for use. Yeah, this is actually the cost of raw materials for use. So cost of materials available. And then that figure will be 390,120 naira. 390,120 naira. Obviously, we know that the next step is to take out our closing inventory or stock of raw materials. Now we have three closing stocks. We are looking for that of the raw materials. And so the closing stock for raw materials is 28,000. That is the closing stock or inventory of raw materials. And when we take the closing stock of inventories out from the cost of materials available for use, then we actually have the cost of direct materials that was used for production. And that is our material cost that we have gotten. And that is 362,120 naira. 362,120 naira. That is the cost of materials used. Okay, so we have established the cost of materials used. Then we have to add, this is for direct materials, so we have to find out if there was any direct labor or direct expenses in the question before we can arrive at our prime cost. Yes, in the question there was direct factory wages. You know, we had two different types of factory wages. One was direct and the other was indirect. Now the direct factory wages that we had is 86,940 naira. So direct wages 86,940 naira. That is our direct wages as per the question. And then in the question there was a direct expense of royalties. Now royalties is a direct expense anytime you see it in a manufacturing account setting. And so the figure for royalties in the question is 37,800 naira. And so yeah, that is for royalties. And so having established our direct material costs, our direct labor costs, and our direct expenses, now we are sure to have our prime cost. Okay. We have our prime cost, and the figure for prime cost is 486,860 naira. That is how we arrive at the prime cost. And so from the prime cost, we have to also list and add up our factory overheads. Our factory overheads. Okay, so now that we have seen our prime cost, we have to also list and add up the factory overheads. So with the factory overheads, remember that we have already apportioned some common expenses for factory and administration. And so we have to start with that first, and so that we will not forget. So we'll go back and look at those workings that we did and then pick up the figures for factory, and then we bring them under factory overheads. And so we had factory rent and rates, which was 4,944 naira. That is what we had from the workings. And then we have factory light and heat. Light and heating. Factory light and heating is 11,556 naira. And then we have factory insurance. Factory insurance, which is 1,500. So insurance is 1,500 for factory. And then after we have gotten that, we go back to the trial balance, and then we try to spot some of the things in there that will come under factory overheads. And so going back to the trial balance, we'll see that we have factory power in there. Factory power 31,300 naira. And so that will be under factory overheads. 31,300 naira factory power. And then also we have indirect factory wages. Indirect factory wages is also an overhead. Remember that the factory wages that they gave us, we had a direct component and an indirect component. So indirect wages for the factory will be an overhead, and that will be 53,960 as per the trial balance. And then finally, there is one very important expense that most people overlook when it comes to overheads, and that is depreciation of plant and machinery. Now remember that plant and machines are used in the factory, and so when they depreciate, they are factory overheads more than administrative expenses. And so we'll go and pick our depreciation figure for plant and machine. And then we'll bring that of 25,000 naira under factory overhead, because depreciation of plant and machine relates to the factory. And so having gotten this, we'll sum up our factory overhead. And so the total of the factory overhead will be 128,260. 260 naira. 128,260 naira. And so we are going to add that to our prime cost. The prime cost is 186,860. And the factory overhead is 128,260. And so we are going to have 615,120 as our cost of production. Now, this cost of production that you see here is the gross cost of production, because in this question there is work in progress. And I remember telling you that whenever you have work in progress in the question, the first cost of production you have will be called the gross cost of production, because you are now about to adjust for your work in progress. And after work in progress adjustment, you have your net cost of production. And so what we are going to do is that we are going to add our opening work in progress, WIP, and then we will less the closing work in progress, and we have them in the trial balance. Now the opening work in progress we have in the question is 14,760 naira. That is the opening work in progress that we have. And then the closing work in progress that we have is 16,500 naira. And so that should be less in brackets. And so when we adjust for the work in progress, add the opening and take out the closing work in progress, whatever figure that we have is our net cost of production. And that is what we are going to use to prepare the income statement. And our net cost of production is 613,380 naira. That is what we have for net cost of production. Now take note that in this question there is nothing said about manufacturing profits, and so we are not going to bring that in and then get our market value. Now in the next question that we are going to solve, we are going to take a look at how to use manufacturing profits, arrive at your market value, and also we are going to learn how to treat provisions for unrealized profits. Okay, so that is our net cost of production, and so we are going to proceed from here to prepare the income statement. All right. Okay, so now we are going to prepare the income statement. Now, mind you that we could have prepared the manufacturing account and the income statement together in a way that right after cost of production, we will say finished goods. Instead of creating a new heading for income statement, we would have just said finished goods, underline the finished goods, and then we start with our sales. But in this case, I'm choosing to separate that. And so what I'm doing is that I'm going to prepare the income statement, and I'll start with my sales revenue. Now the sales revenue from this question is 830,900 naira. So this is what we have for sales, and so we take out our sales returns. And I know we are very familiar with this format already, and so we will not waste too much time on that. And so sales returns is 900 or 9,000, sorry, 9,000 naira from the question. And so we have our net sales. When we take out the sales returns, the resultant figure is our net sales, and that is 821,900. So this is what we have for the net sales, and so we take out cost of sales. And for the cost of sales, because this is finished goods, we are going to use our opening stock of the finished goods. Remember that we have 3 different opening stocks. We are going to use opening stock for finished goods. And for the opening inventory for finished goods is 17,700 as per the question. 17,700. And then, now usually we should have added our purchases of finished goods. But then, because they are a manufacturing company, they don't buy and sell, they manufacture what they sell. And so in place of purchases, we are going to replace it with our cost of production. And so we add the net cost of production, which we had from our manufacturing account. So over here, we are going to add our cost of production. And the cost of production is 613,380. Sorry. This is the cost of production that we had from our manufacturing account. And so once you get here, after your opening stock, straight away add the cost of production. If it was the market value, you add the market value straight away to the cost of to the opening stock. Sorry. And then when you do that, you have your cost of goods available for sale. So the cost of goods available for sale is 631,080. That is what we have. And then we take out our closing stock of finished goods. So closing inventory or stock of finished goods will be taken out. And per the question, our closing stock of finished goods is 20,680. And so 20,680 naira will be taken out. And when you take that out, straight away you have your cost of sales, which is the cost of sales is 610,400 naira. That is our cost of sales. And we are going to less that as well in order to ascertain our gross profit. And so I put that in bracket and I take it out from my net sales. And I arrive at the gross profit for the period. And therefore the gross profit for the period is 211,500 naira. This is our gross profit for the period. And once we get our gross profit, we ask ourselves if there was any other income in the question. We add our income before we take out expenses in the income statement. And looking through the trial balance, the only income that we have here is our discount received. Apart from the discount received, we don't have any other income. The discount received is 15,000. And so we add up our discount received to the gross profit. That is 15,000 naira. And when we add the discount received of 15,000 naira to the gross profit, we have 226,500. And that is going to be called our total income. And having ascertained the total income, the next thing for us to do is to take out our expenses. So having ascertained the total income of 226,500 naira, we are going to less our expenses. Now, taking out expenses in manufacturing account setting is quite different from that of the sole trader that is not in a manufacturing business. Now, in a manufacturing account setting, we usually group the expenses. And so we are going to group them under headings. And so we are going to have administrative and general expenses combined first. And then we are going to have selling and distribution expenses also under a heading. And finally, we are going to have our financial charges. And so I'm going to begin with my administrative and general expenses. And administrative and general expenses, under that, remember that there were some common expenses that we shared between the factory and administration. And so let us begin to list those ones first. And so we will have rent and rates for administration. And from our workings, we got that to be 3,296 naira. 3,296 naira. And then also light and heat. And light and heat for administration was 7,704 naira. And then for insurance, the insurance premium for administration was 1,000 naira. And so these were the three common expenses that were apportioned. And then we will go through the trial balance to try and discover any other expenses that relates to administration and general expenses. And then going through that, we have general expenses of 42,020. Yes, general expenses of 42,020. So general expenses of 42,020. And also we have administrative salary. We had administrative salaries in the trial balance, and the figure for administrative salary in the trial balance is 28,660. 28,660 naira. And so these are our administration and general expenses. And so we can end there. Now normally, sometimes in some books you see that it's possible for you to list these expenses on the first currency sign and then bring out the total here. But in my case, I decided to list them all on the same currency sign. Then I'll bring the grand total at once. And so we move from administrative expenses into selling and distribution expenses. So under selling and distribution expenses, let's go through the trial balance to see if there were any expenses under selling and distribution. These expenses relate to the sale of goods. And so going through the trial balance, we have salesman commission. So salesman salary, and then we have sales commission as well. So these two expenses directly, as their name suggests, will be under selling and distribution expenses. So we have sales commission paid. And the figure for sales commission is 35,980. And also we have salesman salaries. Just like administrative salaries was grouped under the administrative expenses, salesman salaries should come under selling and distribution expenses. And that is going to be 13,360. That is per the trial balance. So these two will obviously be here. And then finally, there is one other expense that if you are not careful, you may not take note of. And that is the depreciation of motor van or delivery van, Now, we were told that depreciation of delivery van was to be calculated, which we did earlier. Now, what is the job of a delivery van? Delivery vans are used to deliver goods to customers, and it is part of the selling and distribution activities. And therefore, if they are depreciating, the depreciation on that should come under selling and distribution. And so we will look at depreciation of delivery van, and then that will be part of selling and distribution expenses. And when we calculated, we had 25,000 for that as well. So that is depreciation on delivery van for you. So these are the only three that we have for selling and distribution expenses. And then going through the trial balance, we will see that the only expense that is left that we have not used is discounts allowed. Discounts allowed is not an administrative expense. At the same time, it's not part of selling and distribution. And so we will group that as a financial charge because it's a charge against profit. So financial charge, and then we put under that, we call it discounts allowed. Of course, if there were any bank charges, all would have come as financial charges. And so discounts allowed is the only financial charge that we have here. And the value for discounts allowed is 16,500 naira. And so what we do now is that we have to sum up our total expenses. We sum up the expenses and see our total expense. And when we sum that up, we are going to have 173,520 naira as the total expenses. and we are going to subtract the total expenses from the total income in order to ascertain our net profit or loss. And when we do, we are surely going to have a net profit because the total income exceeds the total expenses. And so our net profit for this very company will be 52,980 naira. That is our net profit, 52,980 naira. Ladies and gentlemen, this brings us to the end of the manufacturing account part of this question. Now remember that there was a statement of financial position requirement which I am not going to solve for you now. I'm going to leave that as a practical assignment for you to solve. And then what you have to do now is to solve that and be sure that you'll be able to balance it. But if you want a clue, I'll tell you that if you get to the inventory side or the stock side for the current, under the current assets, make sure that you are bringing all three stocks, the closing balances of the finished goods, stock of finished goods, stock of work in progress, and then stock of raw materials. All three should be part of your stock or inventory balance in the statement of financial position. Apart from that, I don't think there is any other thing that is new that we have not done. If you want any clarification, I would recommend that you refer to my lesson on adjustments for final account and then the final account of a sole trader part 3. If you go there, you will refresh your memory and learn how to prepare the statement of financial position for this question. And then you look at it, try and solve it, and make sure that you balance it. If you have any challenges solving, you can pick the number on the screen and then you WhatsApp me and then you interact from there. You can also post your comments in the comment section below and I'll come and attend to you. But until we meet again, I will just urge you to subscribe to the channel, share this video, and then let others also have a benefit. We are going to meet again for part 3 of this lesson. We are not done with manufacturing accounts. We are going to learn how to treat manufacturing profits and also how to treat provision for unrealized profits. It's bye for now and see you again next time.